Hey everyone, PJ back with another Watch Trading Academy video, and today we're going to be talking about buying watches overseas. Something that we've been hearing a lot about, especially since the price increases across the board here in America, and people have really resorted back to looking overseas for some inventory. And so today, let's discuss the power of buying watches overseas and if you do indeed get a better deal or not. And so one of the things we're going to talk about is really understanding the watch markets, how they fluctuate country to country, and what creates opportunities there versus opportunities here, and so on and so forth. Now, if you understand watch investing, then great, we'll get straight into this video. But if, again, you're new to this and still don't understand why watches are incredible investments that can yield great returns, often 20-30% month after month, then please make sure you click the link in the description and get started on watch investing. It's an incredible opportunity to learn how to do this, and anyone with $1,000 access to a post office and a computer could get started. Now, if you have a lot more money than that, even more power to you, and you'll get straight into the big leagues with the Pateks, RMs, and Rolexes. But for now, everyone can get started with just $1,000, and it's better to start than to never start at all. Historically, remember that watches for the last 20 years have been one of the best asset class investments, even beating out real estate, and that's pretty crazy. But it's really data, so it's happening and you should be part of it. Now, let's talk about overseas purchases of watches, because this is something I get asked a lot. Do you buy watches overseas? And the short answer is I tend not to, but I do reach out to brokers who do and individuals who can bring deals here from overseas because I have a few trusted sources that can do that, and it does sometimes make sense. So today, we're going to cover why it does or doesn't make sense and what you should be really paying attention to if you're going to be undertaking that purchase. So the first and biggest problem with buying a watch overseas is obviously the trust and the capacity to transact, because you not only have to avoid duties and all that stuff, but you also have the ability to wire money to a complete stranger or someone across the globe somewhere else that you are going to have very little recourse being able to go after. This is something that you have to understand is very, very dangerous if you don't know what you're doing. So I'm going to be very clear that you should not be randomly sending strangers or jewelers or individuals you have not met, done business with, or have recommendations from, or have strong references from, random money in order to save a few bucks overseas. The things you have to understand about how the watch markets fluctuate between here and Asia and perhaps Europe is that there are cycles to every single watch market. And the cycles are quite simple. You see, we've talked many times previously about the fact that watches are global currency, meaning that watches actually adjust based on the currency of the country. Now, what does that all mean? Well, the simplicity of it is this. Let's take a simple example, like we have a $10,000 watch that is sold here for $10,000, but it is sold right now in Asia for maybe $6,000, right? Meaning that that is what it costs them to do it, on the basis that our currency might be stronger at the moment. This is not a current world event, it's just an example. So if our currency is stronger, which allows us to basically buy the same $10,000 watch, but it only costs us $6,000 in Asia, here's what ends up happening with that watch. Demand from the US pushes itself to Asia to purchase these watches because they're cheaper there. As the demand kicks in, very quickly, the jewelers adjust the market by raising the price of their watches, knowing that it's now costing us a one-to-one, meaning they will rise the prices there, it will rise and ultimately stabilize the price here. So it's like, now it's 10,000 here, it's also 10,000 there. Why is this important? Because now Asia customers have to now pay significantly more money to purchase the same watch, and so their market just went up, and ours is now stable. Now, at different times, different markets go up and go down on the very basic ideas of supply and demand. Some countries get a lot less supply, some countries have a lot more demand. And so when these things are met, then inventory shifts country to country. And so it's a global asset trade, meaning it's a global item that can be traded anywhere in the world and can be shipped anywhere in the world. So it makes sense that it holds the same value no matter where in the world, because it's the same item, just trading hands. So the way it basically works is, as that adjustment happens between Asia and the United States, maybe Europe perhaps, it now costs significantly more in Europe, so people come flooding into the US. Now this raises the price here, and then now again creates the same product going to 13,000 and 13,000 Europe, leaving China once again, or Asia in general, also down. So now you have yet another country that will readjust again because demand keeps fluctuating from place to place. Now, one of the things about the luxury industry and the luxury business you have to understand is that it's very hard for people, once they see a number, to basically understand that the number is going down. Remember, historically, watches have never gone down in 20 years. So it's very hard for jewelers to basically lower the price of something when someone has already seen a number. So it's very hard for a watch to go from 13,000 back to 6 because of the lack of demand, because there is no surplus in supply. So even if demand slows down significantly in the watch market, typically supply will hold at the same number or slightly come down less than 10% to create some kind of market movement, but it will very, very rarely crash. Historically, it actually has never crashed, and it has never crashed on the very simple basis that there is so little supply and so much more demand, then supply doesn't raise nearly at the speed of demand, even in a down economy, that it becomes such a great place to basically park money. So you ultimately have three types of people that purchase watches: investors, traders, and people who basically park money. So new people who just want to park money somewhere, no different than parking gold, right? Like, you can't really transact on gold, but you can wear a watch, and it's significantly easier to move, and it continuously gains value. So there is a new dominant market segment of people who park their money in watches, understanding this, regardless if they're getting them new, used, or anything else. Now, where these lines get blurred or it gets kind of dangerous is when hype raises prices without any real change occurring. When supply gets so limited that pricing goes through the roof, only to later be met with more supply as people were just hoarding inventory. Now, who would hoard inventory? You would say, well, simply put, jewelers, because jewelers understand that by hoarding inventory, the cost basis of the inventory goes up, and then they can liquidate at significantly higher prices later. So the point I'm trying to make here is that it doesn't often make sense for watch buys to happen overseas, but there is a continuous flow of money coming back and forth overseas to the US, to Europe, to Asia, etc., on the basis of these adjustments from 5 to 10% based on supply chains that exist in those countries. So as the money or currency in a country gets strong, it comes to buy inventory from a weak country, and so on and so forth, and it keeps going until all levels are up. The point is, when we used that example earlier, when both Europe and America are at the $13,000 mark for a $10,000 watch, and Asia is still at 10, that money will then fluctuate there, and it does make sense often to buy that inventory and bring it back and allow it to rise even further. Where the difference is as long as you can safely buy the inventory and move it here in a safe manner, avoiding duties and taxes, then it does make sense. If you cannot, then you have to count basically and put the dollar in perspective and understand what is really the upside value of importing that good. So hopefully you found this helpful. Again, if you want to see more videos like this, please like, share, subscribe, and of course let me know in the comments, what are your thoughts? Is it that easy for you to buy a watch overseas, or quite complicated? I'd love to know if there's a process you use that makes it worthwhile. And of course, if you don't know how to become a watch investor, click the link in the description. I'll catch you in the next video for Watch Trading Academy.